I want to tell you something that most people in retirement have never been warned about. And I'm not saying that to scare you. I'm saying it because I've seen too many good, honest people get blindsided by it. If you've ever deposited a large chunk of cash, sold a car, got money from one of your kids, moved your own savings from one bank to another, there's a federal rule that could flag you. Not because you did anything wrong, not because you're suspicious, just because of how the transaction looked on paper. And the worst part, the people who get caught by it almost always had no idea it was even a thing. Subscribe USA Senior Guide, stick with me because I'm going to walk you through exactly how this works. And I'll tell you about a situation, a retired teacher actually, that really got to me when I heard it. I'll get to her in a few minutes. But first, let me explain the rule itself. Because once you understand it, the whole thing makes sense. Here's what's actually happening behind the scenes. Every time you make a large cash deposit, your bank is required by law to file a report anytime cash comes in over $10,000. They do it automatically. They don't call you, they don't ask permission, they just file it and it goes to a federal agency. Now, and I want to be really clear about this, that report is not an accusation. It's not an investigation. It's just a record. It means nothing on its own. Banks file millions of them every year, and the overwhelming majority go absolutely nowhere. So, that part is fine. That part you don't need to worry about. Here's what you do need to worry about. At some point, somebody told somebody, and it spread like wildfire, that if you keep your deposits under $10,000, you can avoid that report. So, people started doing it. Deposit $9,800 instead of the full amount. Split it into 2 deposits a few days apart. Have your spouse deposit half at a different branch. And here's where it goes badly wrong. That thing people are doing to avoid trouble. That is the actual crime. It's called structuring. It's a federal offense. And the brutal irony is, it doesn't matter one bit whether the money is clean. Doesn't matter if you earned every dollar of it over 40 years of honest work. The moment you break up a transaction specifically to stay under that reporting number, you've crossed a line that federal law takes very seriously. People have lost thousands of dollars over this, some have had accounts frozen, and almost none of them thought they were doing anything wrong. They thought they were being careful. So, let me walk you through the 3 situations where this actually comes up for retirees, real situations, and for each one, I'll tell you exactly what trips people up and what to do instead. First one, you've had a truck sitting in your driveway for 12 years. You finally sell it. Private sale, cash deal. Guy hands you $11,000. You go straight to the bank and deposit it. Your bank files a report. Your name goes on a federal record. And I know that sounds alarming, but it's genuinely fine. You did nothing wrong. The report is just a record of a large cash transaction. It has no teeth on its own. The problem comes later. You go home, you think about it. Maybe you mention it to a friend, and your friend says, "Oh, you should have kept it under $10,000. They wouldn't have reported it." And next time you have cash to deposit, you split it up. $8,000 this week, $3,000 next week, just to keep things simple. That's the mistake. That's what turns a perfectly clean transaction into something investigators actually look at. What you do instead is just deposit it all at once, the whole $11,000. Yes, a report gets filed, that's fine. What protects you is the paperwork. Keep the bill of sale. Keep the title transfer. Keep your deposit receipt. If anyone ever asks you anything, you've got your answer right there on paper. Second situation. Your son wants to give you money. Maybe he sold his business. Maybe he just wants to help out. Whatever the reason, he's handing you a significant amount of cash, or your daughter gives you $15,000 to help with medical bills. This is completely legal. A gift is a gift. It's not income. You don't owe taxes on it as the person receiving it. But here's what happens in almost every family when this comes up. Everyone starts trying to be helpful. Your son says, "Let me send it in a few smaller wire transfers so the bank doesn't make a big deal out of it." Your daughter says, "Just deposit a little at a time." Your spouse says, "I'll put half in my account and half in yours." I understand why it feels like the right move. Nobody wants hassle, but every single one of those ideas is structuring. And it doesn't just expose you, it can expose the whole family. What you actually do is deposit it in full, all of it at once. If it's a wire or a check, there's already a clean paper trail and you're basically done. If it's cash, go to the bank. Tell them it's a family gift. Deposit the whole amount. The one thing you want on file is a gift letter. Don't overthink it. It doesn't need a lawyer or a notary, just a piece of paper signed and dated that says something like, "I gave this person this amount of money as a personal gift on this date." That's it. That letter plus your deposit receipt and you're covered. Now, the third situation, and this is the one I really want you to pay attention to. Before I get into it, let me tell you about the retired teacher I mentioned at the start. She was 69, widowed. Her husband had passed a few months earlier, and she was trying to get her finances organized. They had accounts at 2 different banks, 30 years worth of savings, and she just wanted to bring it all together in one place. So, over a few weeks, she moved the money in smaller chunks, not because she was hiding anything. She was grieving and exhausted, and the last thing she wanted was to deal with a big, complicated bank transaction on top of everything else. So she moved 9,000 here, 8,000 there, spread it out over a couple of weeks. 6 weeks later, she got a letter asking her to explain the transaction pattern. That's the situation nobody prepares you for. Moving your own money between your own accounts. No sale, no gift, just consolidating. And it still triggered a review because of how it looked to an automated system. The bank's software doesn't know you just lost your husband. It doesn't know you're 69 and have been saving honestly your whole life. It sees a pattern of transactions that all land under $10,000 repeated multiple times over a short period, and it flags it. That's it. No judgment, no context, just an algorithm doing what it was built to do. So, what do you do when you need to move a large amount between your own accounts? Move it in one shot. A wire transfer or a cashier's check. Clean and done. When the teller asks where the funds are coming from, and they might, your answer is simple. These are my personal savings being transferred from my account at this bank. One sentence, don't elaborate. What you keep on file, a bank statement from the account you're moving the money out of showing the balance before the transfer. Your wire confirmation or cashier's check receipt. If it came from a CD that matured, keep that notice. Takes you maybe 5 minutes to save these things, and they protect you indefinitely. All right, let me talk about what actually keeps you safe, because I want to explain each piece of this rather than just hand you a list to forget about. The first thing is some kind of document that explains where the money came from and why it moved. A bill of sale if you sold something, a gift letter if someone gave it to you, a transfer record if it was your own money moving between accounts. Without this, you're just a person who deposited a large amount of cash and has a verbal explanation. With it, you have a paper answer that closes the conversation immediately. The second thing is a bank statement from the source. The first question anybody will ever ask you is, where did this money come from before it got here? If your answer is a document instead of a story, you're in a completely different position. Third is your transfer confirmation, wire receipt, cashier's check, stub, whatever form the transaction took. 30 seconds to save it. Keep it for at least 3 years. Fourth, make sure your tax return tells the same story your bank records tell. If you sold something for cash and deposited it, that sale might need to show up on your return. When both records line up, there's nothing to chase. And fifth, if you ever get a question from your bank or anyone else, answer it once with your documents in front of you. Don't over-explain. Don't call back with more details. Don't get nervous and start adding information that wasn't asked for. One clear answer backed by paper. If it ever goes further than a routine bank question, stop talking and call a CPA or tax attorney before you say anything else to anyone. Let me deal with a few things I hear people say that are just flat out wrong because any one of them could cause a real problem. The first one, if I keep it just under 10,000, I'm safe. You're not. You're actually in more trouble. 9,900 is one of the most flagged deposit amounts there is. Banks aren't just watching for the 10,000 threshold. They're watching for the pattern of someone trying to stay below it. Repeated deposits that all happen to land just under 10,000 look exactly like what someone who knows about the rule and is trying to dodge it would do. If your amount is 11,000, just deposit 11,000. Second one, this only happens to people who did something shady. It doesn't. The system is automated. It doesn't look at your history or your character before it flags something. It sees a pattern and it fires off a report. Plenty of completely honest retirees with perfectly clean money have gotten letters because a transaction pattern looked off. That's the whole reason I'm making this video. Third, I'm retired. I'm on a fixed income. The IRS isn't interested in me. There's no age exemption, no retirement exemption. The same report gets filed on a 72-year-old depositing cash as on a 35-year-old business owner. Your age doesn't protect you. Your paperwork does. Here's what I actually want you to walk away with today. This rule exists to catch money on serious financial crime. It was never meant to be a trap for retired people who sold a truck or got a gift from their kids or moved their savings after a spouse died. But the trap catches people anyway, not because they're criminals, but because they got bad advice or no advice at all and made a transaction look suspicious without realizing it. You're not in that group anymore. You know what the rule is. You know what triggers it. You know what to keep on file. And you know the one thing that actually causes the problem: breaking up a deposit to stay under a number. Deposit it whole. Keep the paperwork. That's genuinely all there is to it. Drop a comment before you go. Tell me your state and what kind of transaction you deal with most. Property sales, family gifts, or moving money around. I read every one of them. And whatever comes up most in the comments is what the next video is about. So, if your situation is a little complicated or you're not sure how this applies to what you've got going on, put it down there. Might end up being exactly what someone else needed to hear too.